Okay, peeps, welcome back. So today we're going to be talking about if TSLY is a good investment and should you buy or not buy. Let's get it. So the first thing I want to mention is whether you should or should not buy TSLY. That is your choice. It's your money. You can do what you want with it. We cannot give you financial advice. All we can do is basically give you our perspective on what we think. Keep in mind, do your own due diligence, do your own research. We're always doing our own research on our own investments. We do the best we can not to try to invest in anything we don't truly understand. Before we bought any of these yield max ETFs, we were already doing a great deal of research on it because we wanted to understand what it was before we bought it. So we didn't understand everything, but we understood enough to be able to make an investment decision. And so, yeah, anyways, with that, let's get into the content. So, do we think that TSLY is a good buy? We do actually. And again, it all kind of comes back to the question: are you bullish on Tesla long term or are you bearish on Tesla long term? That is the fundamental question here. There's a lot of Tesla bulls out there, there's a lot of Tesla bears out there. It depends on what your perspective is of the underlying investment. Now, these yield max ETFs do have capped upside. That is true. But if Tesla is going up for a very long period of time, then chances are pretty good that TSLY is also going to go up for a very long period of time. As you guys can see here, between May and July, January and February. But when we say a long period of time, we're talking about like something like this from 2019 all the way up to 2021. That's a 2-year bull run on Tesla. Okay. Now you have to understand, in terms of price appreciation, is it a good investment? Well, from the highest point on TSLY to the lowest point on TSLY, you would have taken a look at it roughly about a 31, maybe 32% drop on the price. But if you were that guy that bought all the way at the top of the Tesla chart at $400 a share and you held all the way down to the bottom at the largest dip that we've seen in Tesla for a very long time in the bear market of 2022, you would have lost more than double your initial investment in TSLY. Why? Because growth stocks are extremely volatile in comparison to dividend paying stocks. You have to understand this. Dividend paying stocks, while they may depreciate or appreciate in value over time, they typically are much more docile than growth stocks. Growth stocks are extremely volatile. So you might get big swings to the upside, but you're also going to get really big swings to the downside as well. Growth investing is not for everyone. It's not easy to stomach. Crypto is basically like growth investing on steroids. Guys, we've been in crypto, we've been in stocks, we've been in growth stocks, dividend paying stocks, we've been in index funds, we've been in futures. We're not in options, but we do study it. We've studied foreign exchange, we've studied macroeconomics. Okay, we understand volatility, we understand risk, and so we're okay with stomaching these kinds of things. But again, it comes back to your risk tolerance. How much risk are you willing to tolerate? You know, if this is not something that you can tolerate, then you don't have to invest in it. Again, it's your money. You can do what you want to. If you want to sit on cash, cash is paying a 5% dividend or 5% interest rate right now because of the Fed funds rates being high. Something I will say is that the Fed is more likely to cut rates at this point than they are to raise rates because they've already been raising rates for 2 years. Well, almost 2 years, basically since last March. So a little over a year and a half. And they basically just recently paused rates. I think they've only had like a 0.125% interest rate hike over the last 2 or 3 months or something like that. So basically 1/4 basis point hike within the last few FOMC meetings. Now, in terms of TSLY, we do actually own some TSLY. As you guys can see here, our average cost basis here on our main portfolio is almost $17. If you take a look at the price action of the underlying, or basically of TSLY, you can see that we are pretty much like right about here, which was, well, this isn't exactly a support zone. This might be on a smaller time frame that we put this, but it's closer to the top than it is to the bottom, right? And as you guys can see, the dividends that we got paid out pretty much have almost nearly completely offset the market drawdown that we currently have in our shares. Do we expect Tesla to go back up to this resistance at some point? Absolutely, we do. But I mean, we have not put hardly anything. I think we bought one share in like the last couple of months or something on this ETF on this account because we've been putting most of our money on the Robinhood account and in crypto. But overall, that's actually not bad, all things considered, for investment that some people would say is a scam, which it's not a scam if it's on a regulated stock exchange like the New York Stock Exchange or the Nasdaq. And if it's available on some of these brokerages to buy, it's not a scam. Okay. Whether it's a scam or not is your opinion. The reality is these things have to be regulated and approved by the Securities Exchange Commission for investors to be able to buy and sell. That's the reality of things. As we told you guys before, the SEC is basically the traditional finance arm of the government. It's their job to regulate these kinds of things. These guys would not, I'm telling you guys right now, if these guys did not have the green lights from the SEC or from regulators to do this fund probably wouldn't exist, and it wouldn't have nearly as much capital appreciation and market cap as it does. It wouldn't have the kind of yield that it does. None of this would exist because it wouldn't have been approved. So, with that being said, as you guys can see, we're pretty green on the day. If I can actually get it to scroll down here, you guys can see that pretty much all of the funds that we have are either Defiance or the YieldMax ETFs, with the exception of Netflix, is up on the day. It was up yesterday as well, too. For our TSLY position here on Robinhood, you guys can see that we're slightly out of the money on this fund. In terms of maximum time frame invested, we're down about $6 or about, well, it says minus 30%, but it's not really going to be a lot of money. As you guys can see, it's not actually 30% because the market value currently is 700 and it says we're down only 6%, so it's actually probably closer to 1%. So yeah, not really sure about those numbers, but as you guys can see, the market cap of this thing is growing, 750 million. And the distribution rate currently is about 50%. The most recent payout is roughly about 58 cents. We do expect it to go back up to this 80 to 90 cent range at some point in time. When that's going to happen, we don't know. Another metric that I wanted to show you guys here that we have showed you in the past on this channel, and if you guys have been following us on Twitter, you would know that give me a second. You would know that this is actually a major indicator that we follow. So this is the stocks above the S&P 500 on the 50-day moving average. This is kind of more of a short-term time frame indicator for like swing traders and dividend investors and investors in general that are looking to buy the dip on, I'd say, like maybe a week to a few months time frame. So basically, sellers looking to take profit or short would be looking to do so up here, and buyers looking to take their positions in whatever they're buying would do so down here. As you can see, we have a circle here. You got this hammer candle, green wick rejection off the support level, which is a bullish candle, and we have been moving up ever since. Now, the 50-day average, you guys can see that there is a lot of upside on this thing. It could go as high as 100, so we have another potential 75% to the upside. The last time that this has happened on the 50-day was in September of 2020 and June of 2020, or 2022, which was the bear market lows in the SPX, and then again during the pandemic crash. These were the only 3 times we've seen this happen in the last 3 years. So in terms of historical buying opportunities, this is one of the greatest opportunities in the last 3 years. So we knew a reversal was coming. We called it roughly around the 10% mark. We weren't exact, but as you guys can see, it moved up since. So the real question is it a good investment? Well, it depends on what you want. The fund manager has already said that there's capped upside. Okay. So, you're not going to make like 100% returns like you would with Tesla. And, if you have 100 shares of the fund and you get 58 cents per share. I mean, the question is, what is an extra 58 bucks a month worth to you? For us, that could pay for our gym membership. It could pay for, basically almost pay for our internet bill. It could pay for gas for a couple of weeks. It could pay for a week's worth of groceries, or more or less than that. It could pay for a lot of things, or it could just give you extra potential income, whether you're in retirement, whether you're not in retirement. You have to ask yourself the question, is it worth it to get the yield to trade off for the lack of price appreciation? And again, we don't know. We don't have enough data on these funds to actually decide whether they're actually going to go up significantly in price or not. nvdy's been kind of an outlier. As you can see, nvdy's peak was all the way up here at $26.50 a share. And this was after the fund had been released. As you guys know, these ETFs typically hit the market at about $20 a share. So as you can see, the price appreciation here was pretty substantial. It was about 35%. And then it peaked again roughly at 25 bucks. So the reality is we just don't have enough data yet to know if these things are really going to go up in value over time or not. But, is it worth the yield? That's the question. There was a lot of stocks last year that ended up getting smashed by the markets. We'll take a look at another one. For example, a lot of people want to say that the yield max ETFs are not worth it. Okay, that's your opinion. Would it have been worth it to buy Meta at the top here before the Fed started raising rates and have a 77% drop in your investment? Or even if you decided to buy, let's say you thought this was going to be support, this range right here, and you bought in and you kept DCAing down in, well, you would have had to buy into this stock, Meta, for over a year before it bottomed out. And it would have had to go down 75% before you hit a bottom and before you could potentially move back up in price. If you guys are not studying technical analysis, you wouldn't know when the entry is. Or you might have some indication maybe, but we can pretty much tell you that the entry was right here. That's okay, so that's really bad. Sorry about that. So the entry for us to get into Meta would have been right here, pretty much when these EMAs crossed. And we would have been basically looking for a breakout above this previous resistance level here on these candles. This candle right here, this body close would have been the entry, and then boom. We get our upside here as swing traders. This would not have been a long-term investment for us because we have exposure to this in our index funds. But if we were going to swing trade it, that's what we would have done. So is Tesla a good investment? Yes. For the income, it is. For price appreciation, that remains to be seen. So anyways, hope you all enjoyed this content. If you have any suggestions or comments, leave them below. Please like, comment, and subscribe, and we will see y'all later. Peace.